friends, I'm Rocky Outcrop, or should I say a portrait of Rocky Outcrop, because I'm in this new frame. Isn't it so fantastic? It would be so easy to make it tacky to, but I didn't. I've got that touch of class in there. So this is a Bitcoin versus US dollar coin episode. Thank you so much for joining me. And what do we have on the charts? Well, this is a fallen wedge that we had drawn in for quite a while, and then the prices subsequently broke out of this towards the top side when the prices went through the downward sloping resistance here, and then on up and up and up to this high that came in on yesterday on the 23rd of July. And we had this measuring stick on the charts, and that lines up quite neatly with there. So it's had its full measured move if you take it from the sort of Bukowski textbook style manner. If you want to do it the other way around, and this is what you would be looking at, if I just go back, that's the full size of that measuring stick. If I just kind of stick it in there, you can see. So that's what you'd be looking at, but instead we have it set up like this, you know, so that's kind of it. We've had the full measured move, and I'm also going to just remove these things from the chart now, and actually just real quick, you can see down here we also had a fallen wedge on the RSI with the measured move off the back of it. Likewise, same chat here, it's had its measured move as well. So we'll just take all of that off for now and not let it influence our thinking, because of course we could be looking at it thinking that it's done, it's not going to go any higher, or we could be looking at it thinking, well, you know, there was the full measuring stick or whatever, but we've discussed that to death, so we can look at other things now with that being just, you know, knowledge that we have. So I'll just go through this, taking those things off, and aha, a clean chart. What we're left with over here is this Fibonacci retracement, and that is drawn in, like I say, towards the top end of that measured move where the prices came up to on the 23rd of July, just yesterday there, and the price on that is 9,683, but we could just call that 9,700. If we look down here at the highs, oh, actually no, that's not on the chart there, but if we look, sorry, but if we just look over here, you can see it's more or less 9,700, okay? And that's what we were talking about before with this move up towards the top side, that if it moved past 9,450, there's a pretty good chance that it could move on up to 9,700 fairly quickly, and that's what actually ended up happening. And then it sank back down again to this blue serrated line, which we've spoken about so many times. In fact, when I was cleaning up the charts there, it didn't even occur to me to take this off, because, you know, this has been part of so many conversations that we had, and it's just one simple line on there. So 9,545 is where that's drawn in at, or 9,547. Subscribers know that I just look at these things more or less as being like zones rather than, you know, to the penny lines, but we have seen the price action interact with this one a heck of a lot of times over the last wee while, and I thought that we could sum up the sort of the price action then in today's episode just by looking at the smaller term time frames, because we spend a lot of time in the grand scheme of things looking at the big term time frames where you could see we have these sorts of ideas in mind, where we could move towards the top side, do something like a 10,000, a move up towards 10,000 where that full measured move would have taken you to, put in higher highs than the 9,850 area would be significant. If we did that, we could even be looking up as high as 10,400 where we had our previous highs, and the top end of this parallel channel we have in the background here comes in around about that 10,500 area. So maybe, you know, all those things could happen if we were to get a big string of movements towards the top side. Of course, the median line of this channel comes in at around about the 9,850 area as well. And if we were to move towards the downside, we have the 236's Fibonacci down there at 8889. But instead, in today's episode, well, now you know all of that, though, we're going to look down below the 4-hour time frame, where we have these parallel channels, you could say, drawn on the time frame, but it's just these horizontal lines, really, that we've been looking at for a while. I don't think F has a line anymore, because that was where the bottom end of the parallel channel was, but and which I've removed subsequently. So maybe I should just get rid of F as well for now. Right, great, lovely, jubbly. But there's these 4 lines. These are kind of dominating where the price action could go in and around. 9,850 towards the top side would be the top end of that, of where we could be going if we break past this current area where there's our latest glass ceiling there. And towards the bottom side, we have the 9,304 price point, where this fuzzy line is. Now I would actually kind of look a little bit higher than that, probably call it 9,350 or so. If I was looking for a pivot, maybe I should have that just slightly higher up there, so it looks like that's what we're talking about. Anyway, that's what I'd be looking at. But I thought that actually what we could do is 2 things at once. Just draw on a parallel channel encompassing the highs and lows in and around this area here as well, and discuss how if we had a symmetrical triangle showing up here, then it would only take us up towards the top end of that parallel channel in terms of the measured move off the back of it, and how that could all kind of stack up in the fullness of time, and whether or not we have a head and shoulders or anything like that appearing on the charts too. If you look at the 4-hour time frame, maybe it looks a bit like we're going up here, and are we getting divergent or not? Well, we can see the RSI's managed to go up without that divergence and get rid of that, and the stochastics has managed to go up without that divergence as well, but it did tick over towards the downside. Will we see the support end of this kind of work with us? And we could draw on other trend line things again, like I was deleting off the start of this, kind of working in the other way around, where we have on this one towards the top side, where you have potentially what could be seen as being a sort of rising wedge here, So this would be something to be looking out for if we do see a turnaround in price action. You can see it do the same thing on the RSI, but I'll not do it just to not clutter up the charts too much, But are we looking at something like that in terms of this? And if we were to crack down from these areas, what could be something that did it? Well, maybe there could be looking at this and thinking that some sort of head and shoulders could come in at some point, or something along those lines. Well, let's get on with the show then, shall we? If we take out the old parallel channel jobby, do I have one just beforehand? Do I have one kind of floating around up here? Yeah, great. Okay, just got one already on the price action. So I was kind of thinking that this here might be a decent enough area to look at. We can zoom in and see why in terms of the support and resistance in and around these areas. It's just taking it and plopping it here with the top of the top end of where we came to recently on the 23rd of July, and the most recent wick low where we saw it down there on the 23rd of July as well, during this whippage period where people would have been kind of taken out towards the stopped out towards here, stopped out towards there, creating as part of these spikes happening, and creating that liquidity for people who are wanting to fill up their order books. And maybe this is an area to look to. If we look to the left, we can see that there's various interactions with this line kind of going towards the left, and as well with the top one. I'd have to zoom in a bit for it to be clearer for you on your screens, but that sort of thing. And these sorts, you can see here there's been interaction around this zone, so you can think that that's fair enough. And there's the median line on that comes in just below where the current price is there at 9,566. As you can see, the current prices on Bitcoin are 9,596, and we do have the opportunity as well to think about this just now as to whether or not this could end up being a head and shoulders if we turned around here at this price point and went back down below the 9,545 area and down to what could potentially be considered to be like a neckline in there at 9,484 to 9,450. Just call it 9,450 really, actually at the bottom end of the channel, and where that could take us thereafter if that was to be the case. So if we just, roughly rough and ready kind of do a head and shoulders move like that, and then like the textbooks say as well, like we already discussed at the start of the show, if we bring this back up a bit, to where the realistic areas are, you could be looking at that 9,333 area for a move off of this if we did go beyond the channel, right? But that there would be out with these areas, which we can call then, up until we're at these areas, we could call that sort of fake out territory from a move on something like this, which is what I was kind of getting at as well. If we did turn around and have a head and shoulders, then what would it be then to stay inside of this zone? Well, we could just move back down towards this area at what we could call around about the neckline there, and then move back up again, just as forming part of a symmetrical triangle kind of overall at the minute, if that turns out to be the case. Now, that's just kind of drawn in fairly kind of sloppily, but the idea was really to show off how we'd have these zones, up here and in here, where you could be talking about it being like a fake out for us on top of like, just consolidation within the structure of where we're going before we actually turn things around from a macro level, between either of those 2 points over there. So I think that more or less kind of sums up what I'm going to talk about in terms of price action. There are things that I haven't mentioned, such as how, as we've been coming up here, OBS has crashed. No, it's not crashed. Why did it come up telling me it crashed when it hasn't crashed? Okay. Right. That threw me off a bit. So anyway, yeah, we're still going here. There's this what looks to be bearish divergence between these highs here on the 1 hour time frame, and you can see the same sort of thing there with all three of the oscillators down below. And if we go up to the 4 hour time frame, that's not showing up just that same way, but in the 1 hour it is. And if we go down to something like the 15-minute time frame, then you can see a clearer interaction between the key areas and where the zones that we could consider to be fake outs in terms of the I suppose you could say like the geometry around that section. Right, okie dokie. So that underlines everything. We've spoken about this is, the 15 minutes. You can see the bearish divergence here between these two highs on the oscillators down below, and that's led to this current set of price action. If we did actually have some sort of turnaround zones like this on a very small time frame, then you could be looking at this as being like your neckline as well. But just extend this down a bit, this line here, then you'd be neckline. So if you move down below that, then you could be coming down to those 9333 areas. And indeed, a failed pattern as good as a real one, but this would be like seen as being front running out of this symmetrical triangle. So you would maybe not get the full measured move off the back of this because it would be front run and it'd be a little bit weaker than it otherwise would be, and then you could turn around at that zone. So that's why we could look up to 9,700 as still being that key glass ceiling for us before we could potentially try other areas like the 9850s if we were to continue towards the top side. And this is how you could assess the risk of the likelihood of that happening by all that bearish chat that we had before, and that kind of sums everything up for us. That's both the upside and the downside and the key areas that I'm looking to when I'm conducting my trades in the market. So that should hopefully help you in a FOMO-free, greed-free way integrate with whatever it is that you happen to be looking at, just to give you a bit more context there on your trading. And that'll hopefully, without putting any bias on you or making you feel any FOMO like you need to just get into position now or you need to trade something right now, give you an idea of where you could look to be able to better manage your risk between whatever levels and areas that you choose to trade in amongst, because of course everybody has their own particular style. So thanks so much for tuning in. Really do appreciate it. Let me know in the comments down below if any of that was a help for you. If you did take some value from the episode and you learned something, let me know what the lesson was for you, and subscribe, So thanks so much for that. I really do appreciate it. I'll catch you in the next episode.